Welcome to Deal Playbook, the show where we decode the real strategies of leverage behind scaling, acquiring, and exiting. I'm Tom Shipley, and after building and selling 16 companies, generating over $2 billion in sales, raising hundreds of millions in capital, and leading through chaos and opportunity, I've learned one thing. Success doesn't come from playing harder, it comes from playing smarter. Every episode, we will break down tactical frameworks, investor insights, and mindset shifts that move you from deal hunter to deal architect. This is your insider's guide to creating exponential growth and wealth through leverage, capital, and connection. Welcome to Deal Playbook. Let's get to work.
Fast-growing companies are 3 times more likely to have partnerships, strategic alliances. The data is irrefutable, but most people, it's out of their comfort zone because most people follow the herd. They do pretty much the same thing, pretty much the same way as everybody else. And again, some are better, some are worse. Some have a little bit more marketing behind them or money, but basically that's why most companies can only achieve incremental growth.
I have the extreme privilege to welcome our guest today, which is Jay Abraham. Most everyone who hear this knows who he is. And here's what I like to share for those people that don't. Jay is the most trusted strategic mind in modern business. Over 4 decades, he has helped over 10,000 companies, 10,000 across 1,000 industry, pioneer exponential leaps in profit, positioning, performance. Not only large brands, but from $10 million brands stuck at a ceiling to $500 million category leaders. He helped them reinvent themselves. Jay has been the silent force behind some of the biggest strategic pivots, positioning moves, and monetization breakthroughs in business history. Think about Tony Robbins to Microsoft, Demon John to FedEx. 10,000 companies in 1,000 industry have used Jay's Abraham's thinking to unlock over $75 billion in growth. If you think about it, Jay is the number one breakthrough consultant. And if what you want is real results, you're going to learn about Jay, learn about his teaching, and defer to him. And with that, Jay, it is a great honor. Read several of your books and really excited to have you here.
So what a privilege, and thank you for the build-up, Tom. It's my honor. I'm always flattered, gratified, and eager to have a forum to entrepreneurs and business leaders that I can perhaps catalyze impact and intellectually have a challenging dialogue with. So please, I'm here for you.
Great. And let me set the table. Is most everyone who listens to us have businesses between $1 to $100 million. They're all looking for force multipliers or ways to leverage to scale, which is why I'm especially excited to do this. They're curious about how to do deals, and deals can be joint ventures. They can be acquisitions. They can be mergers. How can they get outsized results based on key strategic moves? So there are 2 things is you've done a lot of work from JVs, mergers, acquisitions. In addition is when you do an acquisition, the first thing you want to be thinking about is how can I take what we built here and with our companies combined actually get those outsized results? So some of the strategies that we'll be talking about today is basically how to layer that in, and that's what we're going to dig into. So let me just jump in and just share with me about your philosophy about preeminence.
Sure. It's a hard one, pardon me, Tom, but I've been advocating it for, certainly 3/4 of my career. In business, no matter whether you're selling expensive, whether you're selling low price, whether you're selling to a niche, to everybody, you want to be seen as the most trusted advisor in the category, the only possible source you could turn to. And in order to do that, you have to have a mindset that first and foremost is willing to tell people what you really believe is in their best interest, not what will necessarily sell your product or service. You have to be able, as there's many elements of this, you have to be able to put into words what people are feeling but have never verbalized so that they can have their subconscious resonate and say, that company, that person, no matter who the representation is, really understands me at a level nobody else does. You have to basically have your entire team be on a mission, a crusade in terms of understanding the transactional value your product or service provides when it's deployed in somebody's life. Most people are transactional, they're just selling a product, but the product, when it's at work in somebody's life or business, is creating some kind of a benefit or some kind of protection. Uh, you have to be, as a leader, and all the people working for you have to be literally committed to falling in love, not with the business, not with your product, not with the fastest growing business being the, in the category. You have to be committed to falling in love with the clientele you serve, and as such, you live in terms of making their life better, to enhance their life, to making them better off every time you interact with them. There are many more aspects, but that's a good starting point for it.
Can you give me an example where someone you work with understood that strategy and made the pivot and the results they got from it?
Sure. I have the number one Honda dealer in certainly the country and arguably the world. He figured out three things. First of all, during COVID, that people needed repairs on their car, but they didn't really want to go out. So he created basically pickup and delivery of cars for service. That alone was profound. In New York, he did some number of hundreds of thousands of transactions, but he also realized that, as cool as that was, it was putting people into stressful positions because they had to get on the phone and put on hold and wait for a service provider to figure out what the heck the status of the car is, when it's going to be ready, what it's going to cost, if there's any changes. So he had somebody create an Uber app for them. He basically also realized that different people will relate to different specialists when you're trying to buy a certain category of car. You could be a first time buyer, you could be buying something very sophisticated, you could be buying a truck. So he ended up having specialists you talk to instead of just a random democratized cycle of salespeople, because different salespeople are better at different things. He also ended up creating, he used AI, but he used it to create very human, um, I'm not going to say humanized, but very human centric communication that helped people not really frustrated or demean them. And that was an example. I mean, I can go on and on, but it's the difference between, I guess, a Hilton and a Ritz Carlton or Four Seasons. I mean, it's just night and day.
Um, Amazing, amazing. When when you go into a business and someone says, uh, my $30 million business is stuck, we plateaued, and every year it's just this fight that we have in maintaining our level of revenue, and we can't figure out how to get ahead. Our revenue or our EBITDA just is consistently mediocre margins on this. And they said, Jay, what should we be doing? Where do you start?
It's very simple. If you think about optimize, maximize, multiply, and and innovate. So everything my career has been predicated on, Tom, for 40 some years has been, how do you work on the geometry of a business? How do you make the same time, effort, opportunity, access, capital, human capital, relational capital, opportunity cost produce multiples more from the same amount of time or less, the same amount of effort or less, same amount of investment, the same amount of risk or less. And that's always been the predicating factor that I start with. So the thing that has given me a truly clinically advantageous and superior advantage over all my contemporaries in what I do is that I have literally been involved in 1,000 industries, not businesses. I have
Mm.
looked at all the different mindsets, all the different business models, all the different strategic approaches, all the different monetization approaches, all the different access vehicles, all the different marketing approaches. And I can look at a business in an industry, Tom, where everybody pretty much does the same thing as everybody else. And if you work your heart out, all you can ever expect to do is get incremental gain. I challenge them because it is very rare that somebody who's spent his or her whole time in one or two related industries comes even close to getting the highest or the best use out of any of those factors. So the first thing I do is question the performance of what they're doing. People don't understand. If you're running ads, if you have salespeople, if you have communication, you can change how you communicate. You can change a headline. You can change a subject line. You can change captions on brochures and literally multiply results by orders of magnitude. People don't understand that. You can change the sequence you use and you can dramatically multiply results. It doesn't cost any more. You can change how you are seen. There are experts that have taught people that just changing your positioning in the eyes of a prospect, if you're a salesperson or if you're a spokesperson, can double redouble results. And I have 97 categories, Tom, that I have uncovered, pioneered, evolved, codified over my career, each one of which drives exponential bottom line performance for virtually no additional risk or cost. So you start with low hanging fruit, and most people have a lot more because they don't understand what I would call revenue system optimization. Revenue system optimization means all the interrelated factors that drive performance, that drive revenue. Most people have KPIs, and that's cool, but they're pretty much the same. And there's a handful, five, six, but people don't look at all the other factors, what you do before you start the relationship, how you start the relationship, all the interconnected bridges that advance and enhance the sale, the first sale, the repeat sale, the upsell. And because of the exposure I've had to so many different methodologies, I can look at all those and almost, not always, but almost always make each one better just by improving it, changing it, replacing it. So you start with low hanging fruit. And then you look at some of the drivers of explosive growth. You may or may not know I gave birth 30 years ago, 40 years ago to what's called the three ways to grow a business. And if there's distortion, I told you, Tom, starting, I'm right on the precipice of a very cool private airport, and there's jets and there's planes everywhere, and there's one that's hangared right below me and it's starting. So if you can't hear it, good. If you hear it, I apologize. But I created the three way. Everything I've done is how to work on the geometry of the business, how to put yourself and your business in what I call the exponential zone as opposed to the incremental zone, where everything you do has a multitude it's a multiplicative effect. It's many times more than an incremental effect, and it also has residual. It's also setting it up
Mm-hmm.
for what I'll call the back end repeat referral, and utility revenue. So back at the ranch, so I created the three ways to grow a business. It's very simplistic in its foundation, but it's very powerful in its effect. So there's only three ways to really grow any business, and there's three advanced ways. The three ways are: you increase the number of buyers, clients, patients, members, whatever they are, subscribers. You increase the size ethically of the transaction and thus the profit. You increase the frequency or the utility, how much more you can generate and thus multiply your lifetime value. Most people don't understand that if you only increase those three factors in a business by 10% across the board, it's not 10%, it's 33 and a third percent. And that 33 and a third, if it's a marginal business, could be all the profit, or it could be massively more profit. If you increase those numbers across the board double, it would be 800%. So everything I've done is work on the geometry. There's about 20 ways to increase the number of buyers, clients, whatever. There's about 15 easy ways to increase the size of the transaction ethically, even if you have nothing else right now to sell and you've only got one product with no optionality. There are a surprisingly large number of ways to increase the frequency, and if you have nothing else to sell, what I'll call the utility value. How many more ethical ways you can generate additional revenue from a buyer or even a prospect or even a distribution channel. So I look at that first, and it's really easy because none of it costs anymore. It's just shifting how you do it. The next thing I do is look at what I call the 9 drivers of exponential growth. These are and realize I'm not operational. I get involved somewhat, but mostly I'm revenue, marketing, strategy, business model, distribution, and reclamation of sunk costs, turning sunk cost investments, leads that don't convert, buyers who buy once and don't buy everything, buyers who buy everything, distribution channels that have variability, salespeople that perform various variability, and maximizing and multiplying the performance of all of that, and combined it's quite profound. But back at the ranch many years ago, I started asking, what are the easiest leverage points in a business that if you make a small change, it's going to deliver a massive uptick. And I identified 9, and I haven't done this for a long time, but I'll see if I can remember most. First of all, is you change your strategy, you change your results, and you talked about businesses 1 million to 100. Up to about 50 or 75, the strategy most of those businesses follow is called being tactical, just becoming strategic and only doing things that enhance and advance a long term game plan that can double, redouble, redouble again the effect, the outcome, the income of what you're doing. The next is you change your marketing. There's a multiplicity of ways to change your marketing. How you target, who you target, the way you start the relationship, what you do at the point of engagement. If you sell many things, what you do at the point of sale, all the way through, how many different ways you do it. The next is distribution channels, which basically most companies in the same industry normally default to one primary selling or revenue generating activity. I try to get the clients I help, Tom, to have 8 or 9. You talked about a force multiplier. People who've never been in the Army don't understand what force multiplier means. What force multiplier means is a militaristic term. And it means if you and I were at war with each other and I wanted to win, I wouldn't limit it to one weapon. I would basically probably start by surface to air missiles, and then I'd do bombs, and then I'd do attack drones, and concurrently I'd destroy your communications network, your roads, your harbors, your airports, your radio, TV, your internet, and then I might do tanks, and then I might do finally artillery, and I wouldn't care which one really delivered the salvo that won the war. I just want to win the war. And most people in business only do one thing. So I try to do 2 things. I try to look at what you're doing and challenge you to make every effort, every action, every element of that perform better because it becomes geometric. Most revenue generating activities have a lot of sub processes in it. If you can increase each process a mere 10 or 15%, it is profound. The next thing I try to do is expand your sources. It's funny, I used to do seminars, Tom, and I would ask people to stand if they did different forms of revenue generation, salespeople, retail, internet, trade shows, partners, licensees, dinner seminars, webinars, and it would be fascinating because someone would stand up, and that would be the vast majority, if not all, of their business. And when they all sat down, I'd say, "So do you see this? 30% get all their business from webinars, but you guys don't do webinars. 20% get all their business from a Salesforce. You have a Salesforce. 10% get it from this. What if you added those additional revenue generating activities to your main income? Even if each one only added 10 or 15%, the cumulative effect could double or triple your revenue and bring so much more to the bottom line. But you're also going to reach people in ways you can't with your normal one, or you're going to reach them more continuously. And it just, so that's the next thing I do. The next thing is systems, process, procedures. In selling, marketing, there's a lot of procedures that are not optimized, that are not maximized, and just shifting them, changing them, fortifying them, replacing them can blow things up. The next thing I do, and just a lot of things like that. The next thing we look at is capital, money, human capital, intellectual capital, relational capital, and moving fixed cost to variable wherever we can. I go on and on, but that's the next thing. the next thing we do is work on your mindset, your ideology, your ideology, because if you don't believe any of this is doable, you won't do it. And then we try to get everybody to use relational capital, joint venture, endorsement, co-branding, recommended provider status, all these other companies, people, individuals, platforms, organizations that already have the hard-won trust and credibility with the same target audience you do to partner with you, to endorse you, to co-brand with you, to recommend you. I can go on, but there's a number of things that cost very little but translate to explosive bottom line. And I also believe that there's a fallacy, Tom. Everybody is obsessed with the 10x moonshot concept, and
Mm-hmm.
it certainly is admirable. But anybody who's ever tried it, if you're trying to get 10x moonshot, it's normally a reference to top line. And if you're trying to do it, you've got to basically figure out what that technologically driven strategy is going to be. You got to find all the high priced experts to work together to do it. It's going to take longer, cost more, like building a house. Concurrently, you got to keep your main business running as is with the same team, and you got to fund it somehow, either out of cash flow, borrowing, or dilution. And when it's finally done, it normally isn't really producing until you refine it. And it's scary. I find that it's almost easy to produce a 10x bottom line over a period of 15 to 18 months just by demanding more yield out of everything you do, everyone you do it with, every action you take, every effort you make. I can go on, but hopefully that answer isn't too protracted.
No, no, it's brilliant. And the only challenge is you went through so many areas of brilliance that I feel that maybe we skipped over so much. I'm going to go back to where you start at the very beginning. And it was
Sure.
very profound. Something that I heard you say, and I think I read in one of your books, is and I just tweaked it slightly for my team
Okay.
is, okay, guys, we went from a period where we're making $600,000 a month in profit. Now suddenly manufacturing went bankrupt. We got in trouble. We lost most of the people in our continuity. We're almost starting again. How do we get back? And I said, let's start with this. We're going to start with Jay's philosophy of, we're going to increase lifetime value. We're going to increase the number of times people are going to order, and we're going to increase conversion, but we're going to start with the goal of 5% each. But if we do that in our margin of our business, it means we're going to increase our profit by 30%.
Yeah.
With that, we're going to have more money to spend on media. With that, we have a higher ROI. We can spend more. And when you increase the amount of allowable you have on media, it is absolutely not linear. It is exponential as far as the universes that open up. And just starting with that and your philosophy on that. And then I basically told my team is we're going to stack rank. Jay would say, what is the highest yield we're going to get? Where's the greatest area of leverage? And we said, let's prioritize all the activities we can do, brainstorm everything, but then identifying those that are the real force multipliers that have the lowest level resources, lowest risk, highest yield. And we're going to do those first. And that's what we did. And we get a blast and getting a lot of ideas from because basically your books are brilliant as far as you can go through that and you can get idea after idea after idea, but then you have to ultimately prioritize them. You can't do everything at once. So again, I went back and that core philosophy that you gave helped turn my business around back to a 600 and then eventually $800,000 a month profit.
Wonderful. Thank you for that acknowledgement. And it really is, derivatives apply almost anywhere. As I said, I've been very blessed. I've done it around the world. I don't know, 5, 6, 7 continents. I don't, and I've done it in about every kind of high tech, low tech, no tech, wholesale, retail, professional. It really is adaptable, and it's the most powerful growth belief system strategy because it doesn't require a lot more investment or risk. It requires demanding a lot more yield out of everything you do.
Mm-hmm. Sometimes and so the challenge I see with a lot of entrepreneurs is they view these ideas as checklist. Oh, I tried a sales team, it didn't work. I tried doing a JV, it didn't work. But the genius is not only just the activity itself, it's how you do it and how you get creative. So let's just break it down let's just talk about JVs. And you mentioned you started going down that vein and you gave us a lot of ideas on how you leverage co-branding opportunities, joint ventures, things like that. Maybe you can just go a little bit deeper in that area because I think it's brilliant.
Sure, I can probably start with the genesis of it. So when I first started out, I had a tiny little client in the brokerage business. They were a gold dealer back when gold was first legalized. I'm that go back that far, and they were doing about $300,000 in transactions, which is nothing. And they were running ads that, like everybody else that was selling gold, and they were getting leads, and they were hammering them and trying to sell them. And I realized that the real audience wasn't a small percentage of the Wall Street Journal or Forbes. It was this emerging audience that was attracted to financial newsletters that tended to be conservative, free market, libertarian, capitalistic, and had a lot of entrepreneurs and professionals. So I systematically made my client the recommended provider of a bunch of newsletters. And we didn't just say, okay, recommend us occasionally, we controlled it. When somebody subscribed to the newsletter, we would actually include our package of content, perspectives, education in the new subscriber package. 4 times a year, we underwrote a special edition newsletter that addressed the outlook for hard assets, gold, silver, rare coins, collectibles. We would pay for the newsletter to sponsor regional events that we would fund, and we would bring an iconic and very very celebrated financial or investment factor in, and we would have the editor of the newsletter and our president. I can go on and on, but what happened was in the course of about 15 months, we got to $500 million of transactions. Now, it was a low margin business because it was mostly, well, actually, it was phase one was low margin because it was gold, and
Mm-hmm.
number two was silver, and then you finally got to rare coins, which had more margin. But we got to $500 million a year in gross, and the client was making $25 million. I in the '90s decided I want to get into the seminar business, but I didn't want to really fund it. So what I did was I systematically went to about 40 newsletters that I had helped, who almost all had entrepreneurs as their audience, and I had made them a ton of money, and they were very comfortable acknowledging that fact in the most laudatory ways that were unique to them, as opposed to the same message coming from everybody. I got Entrepreneur Magazine to partner. I got Success Magazine to partner. In those years, you had the in-flight magazines; they partnered. I had every seminar company that was doing investment seminars that attracted entrepreneurs partnering with me. That was in North America. I got the number one conference provider in Asia. I mean, one in Singapore, one in Japan, one in China, one in Malaysia, one in Vietnam, to all partner with me. I did the same in the UK. Uh, all total, we ended up doing $250 million, $250 million of seminars in about 3 years, and my total out of pocket was $300,000. I did share revenue, but it was on results. And what I was able to do, and this is the profound attraction of joint ventures, strategic alliances, power partnerships, co branding, whatever you want to call a recommended provider, is a typical company that has that kind of trust credibility has been around for a while. They have had to hard win it through performance, through investment, through delivering great products, services. They may have spent compounded in doing it in marketing, in team, in technology, in support, in lease and rent and salaries and benefits, tens or hundreds of millions of dollars each. And you're getting the benefit of all of that leveraged in a no risk, no cost way. And all you're paying for is a share of the results after money is in your bank. So it's a very profound concept. And I've done it for many clients. We've probably done a couple $1 billion, and it's the fastest, safest way. But to embellish it, it's been a while since I've talked about this. Here's some fascinating factoids. 2,000 of the largest corporations in America currently, Tom, get 20% of their revenue, and here's the kicker, but 40% of their profit from partnerships, strategic alliances, joint ventures, etc. Microsoft, as an example, gets something like $32 billion, 95% of whatever their biggest division is from all the partners that they have. Zoom in Japan gets 40 or 50%. Shopify, all these companies are getting it, but most entrepreneurs don't realize the very same
Mm-hmm.
methodology is available to them. There's statistics. Fast-growing companies are 3 times more likely to have partnerships, strategic alliances. The data is irrefutable, but most people, it's out of their comfort zone because most people follow the herd. They do pretty much the same thing, pretty much the same way as everybody else. And again, some are better, some are worse. Some have a little bit more marketing behind them or money, but basically that's why most companies can only achieve incremental growth.
And what's interesting is, and that's the problem, is most people follow the herd and the tried and true, such as, oh, I generate incremental revenue off my business. I rent out my email list, or I rent out my mailing list. Well, again, that's going to generate this much revenue, and it's okay. But if you look at what your real assets are and how to develop partnerships, and I think that's part of what you do that's unique is you basically take every idea and you put it to steroids because you challenge the convention of it and say, how can you actually turn this into something with an outsized return? So even any type of partnership, any type of relationship, how can you really leverage that? So how do you do that?
Well, I think it's a combination of really empirical understanding of optionality and variability and possibility. I've actually seen virtually everything I ever talk about or recommend happen. It's not a theoretical construct that I'm envisioning in my mind and hoping it'll validate when you try it. I predicate almost everything I ever talk about or recommend from something I've actually been involved in or my colleagues have that I know to be true, and most of them are translatable, adaptable, or extrapolatable, meaning you can either apply it directly or you can modify it. I know how I and again, the truth is I've helped more companies explode with less risk and investment. Tony Robbins has been a colleague. He was a client, then he became a colleague. Damon John, one of the founders of FedEx, a founder of Planet Fitness, the CEO of Keller Williams. I said Damon John, Brian Tracy has turned to me for advice. Stephen M.R. Covey. I can go on and on. I've helped a lot of prominent people, and they don't come to me for cockamamie theoretical ideas. They come to me because I can look at what they're doing, how they're doing it, where they're doing it, why they're doing it, and qualitatively and viably challenge their business worldview, their assumptions, their limited beliefs, and do it not to be arrogant, but give them context, give them case study references so that they're very comfortable. And then the best part about what I do, Tom, is you can validate or invalidate almost every assumption with a safe, easy test. You don't have to throw caution to the wind and jump in and put everything on the
Mm-hmm,
line.
mm-hmm,
I
mm-hmm.
learned that early in the game because I worked for companies that had no capital. I had to be very astute and I had to make things work. And so we didn't do anything that was dangerous. But I've been exposed to a world that very few people ever get introduced to, and it's a much higher level of performance. I'm not technologically sophisticated, but many technology companies have turned to me not for help with the technology. I rarely turn my computer on, but to interpret how to make their actions, their efforts, their message to the market much more powerful. We've changed this as an example, the way that people greeted prospects at the front door of a very large furniture chain, and we tested 33 different ways one time, and one of them tripled conversion. Most people wouldn't even think to do that. We've tested changing a price. We've tested three or four different alternatives, and one 40% increase, and it was only a couple dollars less, but it was a more psychologically resonant. People wouldn't think of things like that. We've tested sending multiple communications that approached the topic from decisively and diametrically different reference points or hot buttons, and seen that that outperformed sequencing the same message over and over again, and it beat it
Mm-hmm.
by 30 times. So I understand a lot of things. I've helped the number one multivariable training, multivariable strategic consulting firm in the world that tested about every conceivable variation you can imagine. I helped the number one uh, I have helped the creator of process improvement, optimization, highest best use theory. I helped the number one Six Sigma person, the number one theory of constraints, and none of them came. And by the way, 300 other world class experts. None of them came to me, Tom, for help with their methodology. But I had to learn a distillation before I could help them command more value and more preeminence and more preemptiveness. So I have this knowledge base that is rather unusual and very expansive hybrid that I would venture to say very few other people would ever gain in a lifetime.
Um, Two things that I want to talk to before we go. I know we're running short on time. One is you've done a lot of work from an acquisitions, and then I'm going to end with talking about JAI. Okay, but which is really exciting. But let's start with acquisitions. What is your thoughts, philosophies about the need or the opportunity for businesses to acquire businesses?
Well, I think every business should consider strategic acquisitions, particularly if you can do it cost effectively, whether it's a product or service people buy before, during, after, instead, meaning you compete against yourself, that can transform your business. Whether it's an extension that you're not doing now, that could take the investment you make in a prospect that doesn't buy or a buyer you have nothing else to sell to, and it could make that sunk cost much more profitable. If you have methodology and processes that really are higher performing than the average, but you're only using it for one application and you can translate it to another, you can end up, uh, you know, cutting cutting costs by 10-15%. It's pretty cool if you can get control of what I would call sleeper assets, podcasts, discussion groups, blogs
Mm,
that literally reach the same market, but no one would think to own URLs. I mean, it's a multiplicity. But I will tell you this: we created a book years ago, kind of like 4 or 5 years ago. It was called uh, "Creating Business Wealth Without Risk," and the premise was if you start a business from scratch, you have a 1 in 20 approximate first year success, and I think it's a 1 in 5 or 10 5 year. But if you buy a business that has already been validated and you buy it very advantageously, or it buys itself, it's already been validated now. But most businesses have been under optimized, under maximized, under
mm-hmm.
multiplied. So I think it's great. And there's something like 200 ways you can do it. The conventional way is you just buy it outright for cash, but you really don't have to do that. There's just many very advantageous ways. You can make strategic acquisitions. I think that if I were an entrepreneur listening, I would do that before I would passively invest in anything, because you can basically multiply. We did not a program, but a discussion once on how to multiply the multiple your business sells for way beyond what the industry norm was. And it's very simple. Number one, you have a higher than industry growth rate. You can achieve
Mm-hmm.
that with acquisition. A higher than industry profit level. You can achieve that with acquisition because you've got many more transactions you can generate before, during, after, instead. You want to basically get a far lower concentration risk, meaning you don't want to be as dependent on one source or
Mm-hmm.
one salesperson or one key operative. And the final one is you want to have a superior competitive advantage. And most people think it has to be, Tom, a patent or exclusivity. It doesn't. If you have three times the profit level, as someone else per prospect or per buyer, now you've got a lot more what's called allowable acquisition cost, meaning what you can invest, not spend. Most people think spending, and that's speculative. I don't do anything. We do everything that's called investing. We've long ago delineated there's two kinds of entrepreneurs. There's a 2D thinker and a 3D. And a 2D, Tom, is very interesting. It's a man or woman who thinks revenue minus expense equal profit. A
Mm-hmm.
3D thinks more like, I guess I'd call it a private equity. They think of the asset and how much yield they're going to get from that asset over time. And there's all kinds of soft asset. Salespeople are assets. Access to market is access. Time is, I mean, is everything is an asset, not just the ones that show up on your financial statement.
Brilliant. I'm so excited for at DealCon. We'll be going into a lot more detail on this. And just tell me what, if you, yeah, I know that you've been working on you're working on JI and, and just want to understand more about what you built
Sure.
and,
Yeah, no, I'll be happy to give you the skinny on it. So the biggest challenge I've had in my career is that I'm a unique phenom. I'm a polymorph who has an understanding of stuff that is almost eerie, and I'm a mad scientist, and I'm mature to say the least in my career evolution. But I'm older, and I've never been able to justify working with smaller entrepreneurs because they can't afford me, and I can't. Even if I took
mm,
them on a 50% profit split for the impact I made, the yield wouldn't be enough to justify my opportunity cost because I'm one person. But I have given birth to, I mean, an enormous spectrum of proprietary understanding. As I said, 97 categories, not just techniques, but categories of exponential growth with very limited expense or investment and risk. So a year ago, we started on a journey, and we wanted to create not just a bot, but what we call a super clone. So we systematically put 500 million, not 500,000 or 5 million, 500 million proprietary words of my methodology in it. We put 341 full length anonymized 250 and $300,000 retainer consultations. We put every one of the unique, I think I have 35 expensive programs that sell up to $30,000 a piece into them. We put every hot seat I've ever done, and most of my work is scenario specific. We put every unique keynote I've ever delivered. I every year do a whole day with Tony Robbins. We go back and forth and problem solve and opportunity mine, and we have all of
mm,
that anonymized and put in. We have 40,000 pages of my body of work in it. We have every interview that has been recorded of me that takes a unique position and a lot more. And what we did is, with a lot of investment, a lot of technological, whatever you want to call it, we created what we call JAYI, the super clone, and it's very profound. It's the closest thing to getting access to me, except for I'm very expensive and it's very inexpensive. When I work with a client, they get 2 hours a month of me, and I get a big six-figure retainer, and I get profit shares for 3 years. JI basically is 24/7 access. It's a great thinking partner, a masterful thinking partner, but you don't pay more than a few $100s a month, and it's month to month. So it's really very cool. If it's overwhelming or underwhelming, you can stop. I don't know, did you play with it?
I have not had the chance to play with it, but what I would love to do, I saw a full demo where you did an interview with basically it was someone interviewed you and the AI at the same time, the JI, and it was brilliant. And I'd love the opportunity to do that with you also.
Yeah, we can do it because I'm starting now. We here's what we're doing. We've been loath to take it to market until we had everything we want. We have a masterful thinking version that we are going to let everybody try gratis, and then if they want it, they can convert for peanuts compared to what I would charge. We created a version of it that is designed exclusively to be interviewed by podcasters like you, and I'll send you the newest version. It just came yesterday or 2 days ago. We have a version of it that is designed to be a podcast host. It is actually designed to interview you,
Wow.
and it's pretty
Wow.
cool. We've got version one, and it's pretty mind blowing, but we think it'll get better. And the only thing about it, it's a very unique technology. So it's got video, it's got audio, it's got text. The video is a little bit stayed because the technology people had to decide what to compromise. And every time you ask it a question, it goes through all the things I've shared with you in milliseconds, but they had to favor that. So the video is a little bit jagged, but the response is incredible. It takes a little deferred time because every question or every scenario you pose, it's going through those 500 million words. It's going through the 340
Mm.
year long consultations. It's going through all the hot seats. It's going through all the lectures. It's going through all the keynotes. And it's pretty profound. We're very hopeful that it will be something that entrepreneurs can use to challenge them to perform not just higher, better, and more successfully and profitably, but to challenge them to become more preeminent because we don't believe that uh, you have to play the game of business on an equal, you have to compete on an equal playing field, that there's no reason you can't have every ethical advantage possible. And it starts with a different strategy. Starts with a different mindset. It starts with with understanding alternatives, higher, better, safer, more powerful, more profitable, more residual based alternative ways to do things. And we've tried to, just to wrap it up, we've tried to make the clone the embodiment, the closest thing to me at about it doesn't even correlate. I started 250 and 300,000 retainer and profit shares, and this thing is $250 a month, and it's month to month. So it's designed for all the people who either never could or would pay me. And I mean, I think it's pretty profound. Is it perfect? Sure, no, but it's pretty profound, and we've put an enormous amount of my expansive knowledge into its intelligence, and it's also connected. It's also connected to the open AI, so it's got that duality, and
Mm.
it's designed. I can't give you the right nomenclature, but it's designed, the more you interact and it understands you, the more evolved it is in targeting the answers. And it's designed to hold you to a higher standard. If you don't use it, it'll contact you and tell you what the heck's going on, Tom. We started this on this, and then you let yourself and me down. Are we going to do this or not? And it's fascinating. I don't recommend you do everything with the video because I said it's jaggered. But the first time you turn it on, if you have your video on, it'll say, Tom, that dark black background is interesting. I like your blue shirt. What are those in your ears? Are they pod? Are they pods? Or are they earrings? And it's pretty weird. It's
That
very
that
wickedly smart.
amazing. So I know that you offered this before, and I think Brian just shared it with you. Is that um, we can actually get a link to your public link,
Yeah, we'll
and
give
we
it. Yeah,
can share
absolutely.
that.
Yeah, yeah, absolutely. And Brian will give you one that will tie to you so you can follow up and see. But we are hopeful that an infinite number of people will avail themselves because we're going to do it very, very non-threatening. We're not going to ask for a credit card. We just figure, you know, play with it for 20, 25 questions, issues, challenges, and it'll either blow your mind or it'll be nonplussed. So whatever it is, it is. We're very confident. Unless you're arrogant and you're ignorant, you're going to see that it has an enormous amount of contribution value for a very, 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 very infinitesimal expense. So we're excited about it.
Jake, with that, we're going to wrap for today. Thank you for your gracious time, and I look forward to seeing you.
Thank you.
Thank you for tuning into Deal Playbook. If today's episode sparked an idea or gave you an edge, share it, subscribe, or leave a review. Remember, opportunity doesn't wait, it's created. Until next time, keep building, keep scaling, and keep playing to win.